Porque nunca, y todo estaba muy bien, porque de todo no está bien. También. No, pero yo nos aparece y me acuerdo que por todo muy importante. El interés de los pagadores.
Sí. Ah, no. O sea, lo subiré muy grande y interrumpimos así. Sí,
¿Cuál fue la segunda? Ah, estamos que lo último y luego llegan a otras y ellos que no pueden poner se llama y el voy en el papel. Justo lo estoy empezando. No, ya viste la ahorita está viendo se me olvidaría todo y que tiene como una y llega al cual no, sí, pasado. Se acaba y luego que está aquí y luego ese es el problema es que la tirada es que quieren aprisionar a uno para sacar a su incluso para que se ponen con todos con
How are you? How are your weekend?
Yours?
Did those of you who could not join last Friday have a chance to review the recording of the class? Those of you who could not join on Friday, did you manage to see the class, the recording of the class? Yes, you did? Okay. But let me give you back your exams first. Paulina, José Manuel Díaz, Juan Manuel García Navarro, not here? Adrián Alberto Moctezuma, Miriam Shaddai, Daniela Garza, Mariana García, Itzel, Mercedes, Daniela Guadiana, ¿no? Daniel Sugasti, Jorge Enrique Reina, Melissa Montserrat Treviño, Andrea Tea, Axel Emilio, Diego Castillo, José Luis Galindo, Joel Benítez, Leticia Cuella, Mauricio Sierra, Dayana Gámez, Ricardo Vela, Aldo Silva, Miguel Ángel Flores, Fernando Uresti, Emiliano Rodríguez, Jesús Botello, Glenda, Dylan, Fernando Manuel Rangel, Ricardo Sánchez, Alexis Rodríguez, Patricia Guadalupe, Ana Lucía Game, César Valle, Yair, Juan Manuel Barbosa, Carlos Alberto Rocco, Elizabeth Herrera, María Fernanda Márquez, missing, who arrived a bit late. Me too. Paulina, right? Yes. Paulina. Anyone else? Anyone else? Not received his or her exam? So I asked you if you could join, you could see the recording of the class on Friday because we reviewed the answer of the exam. Is there any question still? Amendment? No? We can move on? No? No questions about the exam? Am I correct to say that the exam is moved to the 30th? Yeah, then? Did we move the exam to the 30th or we don't know yet?
Again, I guess confirming on right now.
This week, okay. All right, we don't know yet, okay.
30?
Yeah, I think so, right?
O sea, como son las conferencias magistrales, nos van a obligar a ir.
Oh, that sounded so bad.
It's not bad, but
It's so sad. You don't like going to conferences?
no, it's not, it sounded sad. I'm not mad at it, but it's true, they force us to go by canceling classes. There's no problem. It's a great way to make us go. But nobody has time in these.
Please, I have a question about the last task. Could you repeat what is the premium?
Liquidity premium, yes. Do you remember the general definition of liquidity? Forget about the word premium for the moment. Do you remember what liquidity is? The ease to transform liquid asset into cash, right? Okay. So now let's think about stocks. Is the stock a type of asset?
Yes.
Mhm. So how can we relate liquidity to stocks? How are they converted into cash?
If you sell those.
So if we sell the stocks, someone has to buy it, right? Otherwise, we cannot sell it. That's clear, isn't it?
Yes.
A sales transaction has to be accompanied by a purchase transaction. They have to be together. Otherwise, they don't exist. They don't exist. So how, in relative terms, how easy you think it is to sell a stock whose price is 1,515 pesos in comparison to a stock that trades at 20 pesos?
It's more difficult.
But which one is more liquid?
The 20.
Do we agree on that?
Yes.
So this stock should be more liquid. Great. So far, so good. Now let's go back to the dividends. What is a 3-for-1 stock split? Can you explain to me? What happens in a 3-for-1 stock split?
One stock converts to free.
Mhm. So originally, I had one stock for every one stock I owned, and will become the holder of 3. So what happens to the price of the stock before the dividend? Let's say it was, to make it simple, 1,500 pesos originally. After the split, what is the price of each of these stocks? Do we agree on this?
Yes.
Okay. So this is prior to the dividend and after the dividend payment. Okay? So when is easier to sell the stock? When is the stock more liquid? Before the dividend or after the dividend payments? After the dividend payment. So because a stock split, a stock dividend have the effect of reducing the price of shares, then that creates the possibility of a liquidity premium. It is easier to trade shares with lower prices. And for that reason, the market may be willing to pay a price higher than the theoretical one. That difference is a premium, a liquidity. Is that clear? So the premium is like an extra cost.
Why the market gives an extra price?
Because suppose that in the market there are only 1 million shares available. And in the market there are $4 billion to use to buy shares. Will everyone be able to get 1 share? No.
No.
So who will get those shares?
Who's one?
And who offer a higher price? Okay. Shares are not sold in auction, but they are offered in ask and bid spreads. So you have to place your posture. You have to place your order. Order is served if the price is attractive for the buyer. If the buyer finds your price not attractive, not high enough, your offer will not be fulfilled. Is it clear what I'm saying? So that creates the liquidity premium. Only those who offer higher prices will get the shares, because shares are a limited asset. Usually money exists in higher amounts, larger amounts than shares.
The premium reference refers to difference between markets and theory.
That's right.
Market premium, liquidity premium, because is behavior of shareholders.
Yes. It's not the shareholder, it's the market, right? The buyers. The buyers. Yeah, so a premium is a spread on the price. Okay. A difference between a reference, which in this case is a theoretical price, and the market price. Okay, is it clear now? So stock splits and stock dividends may create liquidity premiums. May create, not always. Okay. Because if I am not interested in these shares, I won't pay the premium. There must be an interest. My interest is the expected return. If I believe the expected return on the share is higher than the premium I'm paying, I will pay the premium. Otherwise, I won't.
One way to calculate market premium, for example, If Sodiana shares always splits always make a liquidity premium in previous times, we can calculate liquidity premium.
Stock dividends are not that often, so companies do not increase the number of shares as frequent as that. Okay, so there is a history. Yes, we have a history of splits. We could analyze them. We could determine an average premium, liquidity premium. Yeah, but still that does not mean that does not assure that the next split will behave the same. Why? Because the premium depends on the expectation of the firm. So expectations 5 years ago may be different from expectations 2 years from now. Okay, so we can calculate it, yes. We can observe it, yes, but that does not assure that it will be repeated. Okay, all right? Okay, so far so good? Okay, so let's see if we can answer the exercise that is on the screen. Would anyone like to help me read?
Elmer Ltd. has a capital structure consisting of 1,250,000 common shares. Each share currently trades at CAD 86
Canadian dollars.
Trade at Canadian dollars 86 on the Toronto Stock Exchange market. The company is considered three alternatives changes to its capital structure. Number one, implement a 3-for-1 split. Number two, issue a 10% stock dividend. And number three, implement a 1-for-2 reverse split. Heather Topley currently owns 50,000 shares in Elmer, and it's contemplating what effect these changes will have on the percentage of ownership in the company and the value of his investment, her investment. A, what is Topley's percentage ownership in Elmer under each of the three alternatives? Provide calculations. B, what is the value of Topley's investment under each of the three alternatives? Provide calculations. And C, could any of these three alternatives lead to an increase in the value of Topley investment? Explain.
Is the exercise clear?
Yes.
Are the questions clear? Okay. So can anyone tell me what happens in a 3-for-1 split? What will happen to the capital structure of the firm?
The par value will be divided by 3.
The par value?
For sure.
Only the par value?
Also the pointing,
The share is not something.
the share like total.
If some. No.
Let's see what happens to the balance sheet of the company. Do we agree that par value is registered under the name common stock? Okay, so if the par value is divided by 3 after the dividend, what happens to common stock? Increases?
Yes.
By how much?
By 3.
It stays the same.
In the price? No. Yes, it
No.
stays the same because it's the
Yeah,
price.
The same.
The price stays the same.
Right? If the par value is divided by 3, common stock stays the same. There is no change in the value of equity of the firm. What changes is
The quantity of the stocks.
the number of shares outstanding. And because the number of outstanding shares increases by 3, triples, then the par value and the stock price, the market price, will decrease by 3, by a third. Okay? So this is right. The par value of the share after the dividend at moment T1 will be a third of the original price, of the original value. And that will happen with the price as well. The price of the share will be a third of the original price. Moment 1, moment 0. Moment 0 before the dividend or before the split. Moment 1 after the dividend. Okay? But equity remains the same. Okay? Do we agree on this? So the 3-for-1 stock split will increase 3 times by 3 the number of shares outstanding. So the number of outstanding shares at times 1 will be the number of outstanding shares times 0 times 3. All right? So the number of outstanding shares tripled. The equity does not change. Both the par value and the price of the share decrease by 1/3. All right? Okay, so that is the split. So there is no change in the capital structure of the firm. Nevertheless, there is a change in some of the financial ratios of the firm, like the par value and the stock price. Okay? Okay. What will happen in the stock dividend? Do you have this? I'm going to erase it. Do you have it? Yes? So letter B.
Company issue on your shares.
Company issues new shares. How many new shares more?
10% of
That's not giving.
stocks.
The number of outstanding shares
Doesn't change.
it doesn't change?
Yes.
No, because it's only paying, but
It's a stock, 10% stock dividend.
it's paying.
Dividends in forms of stock.
Ah,
Yeah? It's paying shares. So for every 10 shares I own, I will receive a new one. Is that correct, what I'm saying?
yes.
So is it correct to say that the number of outstanding shares after the dividend stays the same?
No,
So what happens with this equality?
basis.
By how much?
1.1.
Correct. 10%. The number of outstanding shares after the dividend payment in the stock dividend increases by 10%. So we multiply the number of outstanding shares before the dividend times 1.10, 1.1. All right? So what happens to the price of the share? The price of the share after the dividend
Come down. Decreases
by how much?
10%.
Okay, so what calculation do I need to do? What arithmetic operation do I need to do?
Basically, times 0.9.
I'm scoring 9.
Yes.
Question. If I multiply any number times 0.1, is it the same as dividing the number by 1.10?
I mean,
Which is, is this correct? Is this an equality?
no,
And which one is the correct one? What is happening in the stock dividend? what happens in the stock dividend? The price becomes 90% of the previous one, or the price is divided by a factor equal to 1.10. This one? Let's make a hypothetical example. Let's say there were 100 shares, each worth $10. So total equity was 1,000, correct?
Yes.
Let's say we declare a 10% stock dividend. How many shares do we have now after the dividend? 110. Is the value of equity changed because I declare a stock dividend?
No.
Okay, so equity stays at 1,000. What is the new price of the share? Price equals 1,000 over 110. And this 110 came from 100 times 1.1. Is that correct?
Yes.
So I can say that the price of a share after a stock dividend equals the price previous to dividend divided by a factor equal to the factor relating to the share, the stock dividend paid. Because this is not equivalent. Right? So the price of a share after a 10% stock dividend is the previous price, or the price before the dividend divided by a factor equal to 1 plus the percentage of the stock dividend that you are paid, which in this case is 10%. All right? And the reason is this one. The reason is that equity does not change because we increase the number of shares. The price is adjusted by a factor equal to the stock dividend paid, to the percentage paid. Right? Is that clear?
Yes.
Okay. So, after the 10% stock dividend, the number of outstanding shares increases 10%. The price decreases by a factor equal to 1 plus 10%, 1.10. All right? That's what will happen in the stock dividend. Is common stock altered? Is common stock different after the payment of the dividend, of the 10% stock dividend?
No.
Is it changed?
No.
It's just divided into a greater number of shares whose price is going to be lower. But the total amount of equity is not changed. Unless the market assigns a liquidity premium to shares because of the expectations of the firm. Then equity might change. Is that clear? But the theoretical effect is that there is no change. Yes.
So in this case, we can say that A and B, it's no change until now on the two examples we have seen.
Mhm. No change in equity, right? Because there is a change in the price.
Yes, but it says in the value,
okay.
so it's not.
We'll go and answer the questions after.
Okay.
I just want us to understand what happens in each of the alternatives, and then I'll move to answer the questions. Okay.
Liquidity premium always happen with split and stock dividend.
Yes, because the price is decreased. Okay. So let's review. In a 10% stock dividend, the price will be decreased by a factor equal to 1.10. The number of shares will increase by 10%. There is no change in equity. Okay, so far so good? Great. Now let's go for the reverse split. 1-for-2. What happens in the 1-for-2 stock, reverse split? Yes, that's great. What happens in a reverse split? what happens?
2 shares become 1.
Correct. So, in the 1 for 2 reverse split, the number of outstanding shares after the dividend equals the number of outstanding shares before the dividend, multiply or divided by 8? Divided by 2. Every 2 shares will become 1. Like in the ratio is always the same. 1 share will become 3. 2 will become 1. Okay? Okay, so what happens to the price? The price after the reverse split holds what proportion to the previous price? Price of this increases by how much?
1.
It should increase.
It should increase?
Double.
Yeah, it should double, right? Let's put the same example. I have 100 shares worth $10 each, total equity 1,000 shares. I conduct a reverse split, a 1 for 2 reverse split. So at the end of the, or after the dividend payment, I end up having 50 shares, half of the shares. Equity is not altered because of that. I'm not selling the shares. I am just combining 2 shares into 1, okay? So equity stays the same. It's still worth 1,000. How many shares outstanding do I have? Sorry, what is the price? No, it's not the number. What is the price? And this 50 was 100 over 2, right? So 100 over 2 will multiply the price by 2. Okay? So the price after the reverse split, in this case because it's 1 for 2, doubles. If it were a 1 for 3 reverse split, the price would triple. Okay. Is that clear? Okay. Is there any change in the equity of the firm for the reverse split? There has not been for the split. There has not been for the stock dividend. Is there any change for the reverse split?
No.
Why would it change?
So in me doubt in the second because I am issue more. No.
I am issuing more shares, but they are not paying for the shares. The shareholders are not paying for them. I'm just giving away shares. But I'm not receiving money. I'm not receiving money. So they are worth the same. Unless I receive more money for the new shares issued, then equity would change. Why? Because if I receive money, I receive cash. Assets increase, equity should increase. Otherwise, I won't have the equality, right? But if I don't get money for the new shares issued and distributed as dividends, there is no cash going into the company. There is no change in equity. There's no money, right? If they were paying me with land, because I am giving them new shares, then that would increase assets and that would increase equity, but they are not giving me anything. They shouldn't give me because I am distributing the earnings of the firm. This is a dividend, right? Is their return. They should not pay for their return, right? Okay, so far so good. It's not the case. It's not asked. But what if the company paid a cash dividend? Would that alter equity? Would that change price? Would that change the number of outstanding shares? What would the difference be with these three other types of dividends?
It wouldn't change outstanding shares, but probably it will change equity because you would have less retained earnings because you're giving a dividend.
Right.
And because it pays a dividend, the price will also change.
Okay. The number of outstanding shares is unchanged. I'm not giving new shares. I'm not buying shares. I'm just giving cash depending on the number of shares each of the shareholders have. So the number of outstanding shares in a cash dividend is unchanged. How about price? What is the relationship between the price after the cash dividend and the price before the cash dividend? I think we discussed this before.
Yes, last class in the classroom, it will be lower because we already lost one opportunity to have class.
In theory, the price after the dividend payment should be equal to the previous price minus the dividend paid. Okay, that's the theoretical event. The price should decrease by an amount, not by a proportion. You see the difference between the splits and the stock dividend? The price is changed proportionally. In the cash dividend, is decreased by an amount fixed and equal to the dividend paid. Okay? How about equity? For the stock split, for the stock dividend, for the reverse split, equity was unchanged. How about a cash dividend? Do you agree with Mauricio that it should change because of the retained earnings decreasing? What do shareholders receive in a cash dividend? What do they receive? Cash, money, right? Where is that money coming from? Where is the cash coming from?
Earnings.
Company takes cash from cash and has to reduce from retained earnings. That's exactly where dividends come from, right? From net earnings retained in the previous exercise. So we reduce cash because we pay money, and something has to be reduced on the right-hand side. What? Retained earnings.
El asiento contable es así.
Yes,
¿No?
and equity. And retained earnings. So equity decreases by an amount equal to
percentage of the dividend.
to the total dividend paid by an amount, by a total cash of the total dividend. So if we declare that we are going to distribute 2 million pesos in dividends, retained earnings, cash, and therefore the balance sheet will decrease by 2 million pesos. Okay?
Yes.
Now it makes sense, right? Because equity is reduced, then the price of the share should be reduced. It makes sense, right? We have 100 shares worth 1,000 pesos. We paid a cash dividend. The 1,000 pesos maybe became 900. but the number of shares stay the same. So it is clear that the price should decrease, right? Is that clear? Is that
Yes.
correct, what I'm saying? So in a cash dividend, because the amount of equity is decreased and the number of shares is unchanged, then the price is adjusted by a decrease.
1,900?
It's just hypothetical, okay? If we pay the cash dividend, this should decrease. All right? So far, so good?
Yes.
So we understand the three different alternatives the company is considering, right? Do we
Yes.
or no? Okay. So now let's ask, let's answer. No, let's ask them. So we have a shareholder, Heather Tuttle. She owns 50,000 shares of the company. Right? And we need to analyze two aspects of her ownership. One aspect is the percentage ownership. So how much proportion of the company is she owner of? Okay. And a second aspect, what is the value of her investment? So my wealth, is my wealth unchanged? Has it decreased? Has it increased? What has happened to my wealth, my investment? Okay. So let's go by parts. In order to be able to make an opinion on the effect of the change, we need to understand what is the current status of the shareholder, right? So what is the current ownership? Current percentage ownership of Heather. So how much of the company she is owner of? How much? Does she own 10% of the company? Does she own 5, 50, 31? How much?
0.04%.
0.04%?
No,
4%.
4%. Does everyone agree? How did you come up with this number?
to divide the shares that Totally has that are like 50,000 between 1 by 1,250,000. That is the total shares of the company. You get 0.0.
Okay. So the company has a total of 1,250,000 shares. 50,000 of those share Heather Topley is owner. Okay, so she owns 4% of the company. That is her percentage ownership in the company. Okay. So alternative one is the stock split. 3-for-1, right? Alternative two is the 10% stock dividend. And alternative three is the reverse, 1-for-2, reverse split. After each of these alternative dividends, what would the percentage ownership of Heather be in the company?
The same.
The same. And would be the same proportion, the same relationship?
Yes.
So it's always 50,000 over 1 million?
No.
So after the stock split, how many shares does she own?
150,000.
Does everyone agree on that?
Yes.
And why?
No, and now the company has 3 million.
Yeah,
750,000.
right? The total number of outstanding shares of the firm will increase by 3, right? Her ownership will also increase by 3. Why? For every share, she will have now 3. So 50,000 times 3. So she maintains the percentage ownership. A different number of shares, but the same percentage ownership. Okay? How about the stock dividend? She maintains the 4%. Does she maintain the same number of shares of the company?
No.
How many shares does she have? Will she have after the payment?
55.
55?
Yes.
Do you remember that we wrote here on the board that the number of outstanding shares will be 1.10 times the previous number?
Yes.
So 10% more to 50,000. So how many outstanding shares after the stock dividend will the company have in total?
1,275,000.
200?
300.
So 55,000 over 1,375,000 is 4%,
Yes.
right? Do you agree? Does everyone agree? Okay. How about the reverse split? So she maintains the 4%, but how many shares does she have? Will she have? For every 2 shares, she will have 1. So she will have half the number of shares, right? So she will own 25,000. But the company will also have half of the number of outstanding shares. So how much would that be? 625?
625,000.
All right?
Yes.
That's it for everyone?
Yes.
So thank you. So assume you are this person, this shareholder, and you vote in the annual meeting. This information tells you that you should be indifferent in terms of ownership, right? In terms of ownership, there is no effect for you. You will have the same number of votes. You will have the same proportion of property in the company, okay? So there is no bad effect for you. But how about your investment? Will your wealth be affected by any of these 3? Yes?
When the company pay any type of dividend, they respect ownership percentage.
Except in the repurchase, because for the repurchase, the shareholder should buy. If he or she wants to maintain the percentage ownership, they have to buy the proportional number of shares to maintain it. If they do not exert the repurchase, then they will see their ownership diluted. Right? Okay? So far, so good?
Yes.
So the effect on the percentage ownership is?
Indifferent. No.
Okay. So let's see about the wealth, the investment. So what is the current investment of Heather?
We don't know the price.
We don't know?
Or it's 86. I don't know.
Yeah, it is. Currently trades, so that is the market price.
Okay, 86.
So 86 is the market price of each share, 86 Canadian dollars. Okay. And she owns 50,000. So currently her investment, her wealth is 50,000 shares times 86 Canadian dollars.
300,000 Canadian dollars.
Right? So she should be worried, or she should at least consider what is the effect on her wealth of these 3 different types of dividends. Because if any of these type of dividends hurts her wealth, he should not vote in favor of that alternative. That's clear, right? She should have a preference for any of the other 2. So let's see. Under alternative one, how much could her investment be worth? She will have 150,000 shares. She will own 150,000 shares. Worth how much per share? What is the price after the payment?
28.666666.
Which is 86 divided by
3.
right?
Yes.
28, you said something?
Yes, 28.666666.
So the number of outstanding shares increased by 3. The share price decreased by 3 as well. Okay? So after the split, what is the value of the investment of this shareholder?
It's the same.
The same, 4,300,000?
Yes.
All right. So no problem with alternative one. How about alternative two? The stock split, no, the 10% stock dividend. She will be owner of 55,000 shares. After the stock dividend, the price of the share will be
78.18, which is 86 divided by 1.1.
right? So total equity for her equals how much?
The same.
4,300,000.
Yes.
And finally, under alternative 3, which is the reverse split, she will own 25,000 shares. Worth how much? What happens to the previous price?
It multiplies by 2.
Doubles, right?
Okay.
Yeah, it's multiplied by 2.
So 172.
And total wealth for Heather
The
equals
same.
the same, 4,300,000 Canadian dollars. So what is the effect of the 3 dividend alternatives on Heather's investment value?
No.
There's no effect either. So even if she's a minority shareholder and the other shareholders vote for any of the 3 alternatives, she won't be affected. Good news, she won't be affected. Okay? Is there any way any of these alternatives could have led to an increase in the value of the investment for Heather? Can you imagine any condition under which she could have benefited from any of these 3? Is there one of these? Is there any of these 3 that could be more favorable for Heather?
If it pay the credit,
Can you repeat that, please?
if the first two alternatives give a liquidity premium and price may decreases. I know.
The one with the lower ground.
Which would be? Which one? This is the price after the dividend payment.
3 times 1.
If stock split could result in a liquidity premium, which could increase market price of shares above 28.66, that could result in a value of her investment greater than 4.3 million Canadian dollars. Is that clear what I'm saying? If the liquidity premium of having shares trading at prices lower than the original one, which was 86, leads to a price higher than 28.66, then total equity for Heather would be greater than 4.3. And this is the way this alternative could give her an increase in the value of her investment. And among the three, this is the one with the highest probability of getting a liquidity premium.
Teacher,
Yes.
the liquidity premium is a quality,
It's a what?
a quality, or is it like extra money?
Extra money. Yeah, a liquidity premium would be that the share traded at 30 Canadian dollars instead of 28.
So the liquidity premium is like the 1.4?
Yes, yes. Mhm. It's a spread, yes. Is that clear? So in theory, splitting shares by 3 should result in a market price of 28.66 Canadian dollars. But if that price and the expectations about the company incentivized the market to buy shares at any price above 28.66, that would be a liquidity premium that could increase Heather's value of her investment above the 4.3 million Canadian dollars. Is that clear? The reverse split does not have that potential. You see that? Because it has the opposite effect, absolutely contrary. And among these two, which could have liquidity premiums, the price is a lot lower in alternative 1 as compared to alternative 2. So if there were any liquidity premium, it could be greater for alternative 1 than for alternative 2. So that's why this is the alternative with a greater potential to have an effect of increasing the value of the investment of Heather. Is it clear what I'm saying? Yes?
Yes, why reverse split is an alternative to pay dividend for this case?
Why are they considering it?
Yes.
Because in the expectation of the board of directors of the firm, they are thinking that increasing the price could create an expectation of the firm that may result in the liquidity premium. So they think reverse. So they want to transfer the signal to the market that they want to limit the number of people who can buy the shares by creating the expectation that they might have in the pipeline, in plans, projects which are very profitable and that they don't want to share with many people. They want to keep them for some people. So that may have a liquidity premium on a reverse side. Okay? But that's only on the mind of the board of directors members.
It is not part of dividend payment.
No, usually reverse split is not considered a dividend because they don't really get anything, right? But it's a type of alternative to change the capital structure of the firm. Okay? Yeah.
So rotation cost doesn't like cover this, like if a company issues new shares, they pay rotation cost, if they pay dividends, it's not considered.
No, they are not. Okay? Yes.
If the dividend was high, the well won't be the same.
You mean about the
Yes, but why the price may decrease and well.
it will be the same, just I will explain it. Is there any question so far so that I can explain the question that Manuel posed? No? Okay. It is the same wealth, just in different form. Let me explain. Currently, She owns 50,000 shares worth $86, 4.3 million Canadian dollars. So let's say the company announces a cash dividend paying 5 Canadian dollars per share.
Yes.
So what is the value of Heather's investment after the dividend? Time T1.
Basically, on the theory, it will be $86, and we will subtract 5 Canadian dollars, which is the dividend, and the stock will remain the same. So it will be like 50,000. And that would be 81 times 50,000, 4,050,000.
And how much money did she get as cash dividend in total for her 50,000 shares? How much money did she get?
$250,000.
Now, equity for her, the value of her investment decreased to 4,050,000 Canadian dollars. But apart from equity, she got another asset, 250,000 Canadian dollars in cash. The people who went for the split or the stock dividend or the reverse split, they only got shares. They only got equity. In a cash dividend, you get wealth, you receive wealth in two forms. In the equity you retain and the cash you receive. So total wealth is the same. Why would I prefer one type of dividend to the other? If I receive a cash dividend, I will maintain the same percentage ownership in the firm. But I have cash I can use. If I receive shares as dividend and I want to spend money, I need to sell a proportion of a certain number of shares. If the rest of the shareholders don't, my case would be that my proportion ownership in the company will decrease. So under those circumstances, I of course would prefer this type of dividend payment because maybe I don't want to dilute my ownership in the firm. That would be rational, obvious, expected, right? Okay. So cash dividends are preferred by shareholders because of this duality. They do not dilute their ownership in the firm, and they have cash they can use. Even they could increase the proportion ownership in the firm by using the cash and buying new and more shares, you see? So cash dividends are very frequent and are preferred by shareholders because they have benefits that the other types of dividends don't have, right? So they are popular because of that, right? But yes, indeed, equity will change, you are right. Nevertheless, total wealth will not, okay? So in other words, any of these four types of dividend payments would give the shareholder the same amount of wealth in different forms, in different ways. Okay. So when we vote or when we propose the type of dividend, we have to think of the other effects, not only the effect on price and equity, but the other effects that the dividend may have on shareholders. And that's why they vote, because they prefer, some of them, probably many of them, or the majority of them, will prefer to have some cash at hand and do whatever they want and keep their proportion in the company, even though total equity decreases. But they know that with the projects they have in mind, that cash, that return earning will compensate them later. And later, right? Okay, so far so good. Questions? Yes.
Although in theory, we will expect that the price will be affected by the amount of the dividend paid. In reality, it happens.
What happens most of the times, not all the time. What happens most of the time is when you announce the dividend, usually the price increases a little bit and then decreases. So it increases because everyone wants to buy the share because they announce a dividend, especially for cash dividends. So they announce a dividend, everyone wants to buy the share. So they force the price up a little bit and then it decreases. So that's what we usually see. So the ex-dividend date is far away from you. The payment date is far away. It's just everything happens on the announcement date. And sometimes because information sometimes, skips, is leaked. So sometimes even before the announcement, you see some volatility in the price. Because as I told you, companies that have regular dividends, we already know more or less which are the weeks in which they used to announce the dividend. So people is attentive to their news. And some people buy in advance. And because they buy in advance, they force the price up. But then, after when the date is near the ex-dividend date, then you see a decrease in the price because you won't get the dividend. Right? So there's no incentive to buy it. Not a bad thing. Okay. Questions or comments?
No.
Okay, I have 15 minutes left, but I'm gonna leave anything I start, I'm gonna leave it in the middle. So with better, I'll do it and start on Wednesday, okay? We just have to think of what is left about dividends is the effect on ratios. That's it. We will finish and we will start listing probably Friday. Thank you very much. Thank you. Is there anyone who came late and didn't collect his or her exam? Is that right? I cannot say.
Speaking, you already finished your investigations about you.
No, I haven't. So, just
Do you close at the end of extension?